Yeah, hi everyone. This is RUSHABH VORA here from SILA. Thanks for taking time out to listen to, this 20-minute brief that Nilesh and everyone and the FMJPI group has asked us to, give. So thanks for inviting us to speak here, and I hope the 20-minute session or whatever I'm going to say is useful. So firstly, I want to just thank this whole group and forum that Nilesh and FMJPI have put together. It kind of puts all our industry stakeholders together, from clients and job seekers, current employees, and it's a great platform. And it helps. We use it a lot to recruit and as well, and spread awareness about what's going on in the space. So thanks to Nilesh and team for that. I'll make this session, as I said, short, brief, to the point, related to COVID, how we've dealt with COVID, and how we at SILA see, see businesses or see the FM industry, or the space evolving over the next 12 to 18 months post COVID. Um, I'll just quickly give you a brief background. I run a company called SILA that I started with my brother Sahil in 2010. I oversee the facilities management business. We've got three verticals. We have a facilities management vertical. We do a lot of interior contracting work, which is typically design build, but more focused on the contracting for offices, high-end homes, bungalows, etc., finishing of buildings, hotels, all of that. And we also have a project management and advisory piece, which typically does technical due diligence for funds investing in India. So we do their pre-investment diligence and post-investment reporting. So this is kind of three parts of our services business. We also have a small distress asset development arm now, where we have, opportunistically started developing two assets as development managers, and focused on the MMR, Mumbai Metro region. So that's the brief. I'll focus purely on FM. Starting off, high level industry impact, and I'll tell you how we've spent our time firefighting through this crisis over the last 90 to 100 days. And then I'll touch on some metrics that I think companies will need to look at, job seekers will need to look at. So I'll just go through that in that chronology. So to start with, on the industry impact front, right? So we personally, and I personally believe that COVID-19 will have a similar impact that 9/11 had. 9/11 had that impact on security. COVID-19 will have it on hygiene, health, cleanliness, etc. Right? So the long term impact will be similar. However, so there may be a tailwind in the long term for us as as FM. However, in the short run, I strongly feel that there's going to be a lot of pain, right? So until there's a vaccine found, office sizes are smaller, density, or they will get a lot more de-densified. However, the amount of people going to work is going to be a lot less, and that is going to cut down the size of the overall market size of this industry, at least for the next 12 to 18 months. So that's one point. Second point is the pace of shift from unorganized to organized will now accelerate, right? So it will become harder and harder for players that are non-compliant, smaller, and not following the rules, or working on payment and credit terms that were already stretched to survive. So I think that shift will now start becoming a lot faster. Given the crunch with cash, we will start seeing a little more consolidation. It is still a very unorganized space in general, but we will see the shift move faster. Third point that I want to highlight is on gross margins and cash flows. It's pretty obvious. Everyone knows that cash flows are stretched because your clients and everyone else is going to have a tough time paying you on. But we also will see, I think, a long-term change in the typical gross margin that our FM companies operate at. So I think this will correct downwards by 2%. Obviously, there's a short-term impact. People are trying to get more business. Clients are trying to cut costs. But what typically happens is once costs are cut and margins are reduced, even when stuff becomes okay and the world is a better place and the economy starts reviving, we will probably not see an increase in margin again, right? So I think businesses have got to adjust for cash flows, adjust for OPEX, which are operating expenses, to mentally make a shift that, listen, we're going to make 2% less than what we were making. How do we realign our strategy going forward? And this is, in my opinion, a long run thing. It's not a short run thing. I might be wrong. Fourth point that I think will happen with the industry is the service basket will evolve, right? We might start seeing a lot more, people are going to expect a lot more productivity, and given less people, more place to cover, given the cost implications and the whole emphasis on hygiene, right? So we're going to see a service basket evolving. People are going to expect to use a lot more tech. A cleaner might be asked to do 2 or 3 or 4 more things than they usually did, and an engineer might have to do more things than they did. An electrician might have to even chip in with cleaning. You never know what's going to be required, but I think overall the service basket will become more holistic, less specific to cleaning or engineering or just whatever other front desk, help desk. I think people are going to have to start multitasking because and increase productivity. So I think that's going to be a change. Companies will need to start thinking of providing services that they did not. Let's say when we were doing cleaning, we would first say we're only focusing on cleaning. We're not going to help with moving, right? Unloading, loading, moving, all of that. Now we're going to have no choice. We're going to have to do that and help because we're going to have to add value to the client. So we're going to have to stretch that extra bit that we typically didn't do pre-COVID. Last point is related to the job market, and I know there are a lot of people on this group that come here for recruiting, right? And I'm not going to be I'm going to be brutally honest. It's going to be a very, very tough job market for the next 12 to 18 months in FM. We typically interviewed, and some candidates are very, very good and bright and promising, but when we typically interviewed, we would be asked to give ask for an appraisal of 20%, 30%. Right now, if you have a job, stick to it. Make sure you're working really, really hard. Make sure you're making a case to either your employer, if you're an operating staff, or if you're site staff, to your employer plus your client, that, listen, I really am needed and I am actually providing some value to this site, right? So I think it's going to be a very hard 12 to 18 months. Short run, medium term impact for the FM business is going to be fairly severe. In the long run, however, when we take a 3,000-foot macro view on this, as I said in my first point, hygiene is going to have an impact that security had, right, post 2001. That means we will probably see in the long run people starting to take FM more seriously. So in 12 to 18 months, I think the job market will improve. I think our businesses will look different, but the way we service sites, etc., will change. So I think it's going to be 12 to 18 months of pain. Please be prepared to take on jobs that you did not take on. Look even outside the FM market, or if you were an engineer, look at HVAC. You want to do X, try and do Y. If you were you're doing work in in cleaning, for example, pest control services has done well, and I think that's the need of the hour today. Maybe you want to switch over to that side. So you're probably going to have to think of ways, if at all you don't have a gig right now or a job right now, you probably want to think of things to do outside of your regular what you like to do, because everyone's going to have to get out of their comfort zone now. So that's kind of my take on FM, on the kind of overall macro view on how the market will play out. Again, this is just my view. We may be completely wrong. I hope we're completely wrong, and stuff things starts to improve faster than 12 to 18 months. But I just think that we are still in the beginning of this, and until there's a vaccine coming out, there's nothing that's going to change. I'll now come to my second part of this 20-25 minute discussion, which is based on how we dealt with COVID-19. Right, we're also young entrepreneurs. It's a 10-year-old company. We have about 6,500 people to take care of, right, as employees of ours, and how do we do that is something that feeding so many people and paying so many people, we felt that's a responsibility we really had to take when COVID hit us, right? So the first thing we did was, first I would say, of the 90-day period, the first 45 days was crisis management, right? So number one, trying to assess how much business we've lost, how much gross margin or how much profitability from the sites we've lost, really deep dive into our operating costs. What are our costs? What are our travel costs, budgets, everything? Break it down we got very granular, right? Way more granular than we would ever get. And then we realized that, listen, we'll have three cases, right? We made three cases. We made a case A, case B, case C. And case A means best case scenario. There will be 1 or 2 months of pain. We will not be that badly hit. And let's assess that. And these cases we would assess from time to time, every 5 to 7 days over this 45-50 day period. Case B was slightly worse, right? Case B was where the situation would be bad for 6 to 9 months, which would mean we would have to take X number of steps. That means cut salaries to some extent and maybe have 1 or 2, 3 job cuts wherever we could. We tried to avoid it, but have some cuts on places that are really non-core, right? We were experimenting with a couple of business strategies within that. We've cut off all the experiments, stuck to the core. Case C was worst case scenario, which is actually where our interior contracting business fell in, because that business has been impacted severely over the past 3 months. Was where we'd have to cut salaries and costs a lot more, and also look at shutting off some offices or divisions and having layoffs to some extent. Luckily, what happened with the FM was, I think we're still in B, right? And we've reached case B, and what we have done is we explained case A, case B, case C to our employees on day one. I think on the 5th day or 6th day after COVID started, right? So in the end of March, we had a town hall, we explained this to our employees, and we told them and gave them clear clarity that, listen, this is where the company's numbers are. This is where what we're doing in profit. At SILA, we're fairly transparent. I think everyone across the company knows our numbers, where we have full transparency with our revenues and profits. Everyone knows everything, right? So we have no problem with that. So we gave that down, right? And what we did is every couple of weeks we had a town hall and we explained to them where each business has moved and what we need to do. So I think the first 45 days was a lot on crisis management. The other things we did is we tightened up our contracts with our clients, tightened up our contracts with our vendors, just got into stuff that we probably never have time to get into on a day-to-day basis. So we did a lot of the cleanup, which frankly is helpful because I'm pretty confident that we'll come out of this a lot leaner of an outfit than we did, and there was a lot of flack, right? So there's a saying that tough times drive efficiency, right? So when you're the tightest on cash flow, when you're the tightest in the tightest positions, you find more and more ways to be efficient, and that's clearly what's happened. Not for us, it's happened for every single company on this planet, I believe. So when resources are scarce, you find ways to be more efficient. So that's what we did after we got through the whole figuring out what's going on and sorting out the problem within the company. And luckily we've made barely any job cuts. I don't think in FM we made a single job cut. And on the back office side, unless clients have cut off sites, but that's also very, very rare. We obviously focused on how do we pay our employees, negotiated a lot with clients to try and make sure that they pay a full salary. If they did not pay a full salary, some of them refused. We ensured that everyone was given some money in their pocket, right? So again, this is a company level call that we took. Every company has their own strategies, but we went out and put money in everyone's pocket regardless of whether the client paid us or not. Did we pay a full salary? No, but 20 to 30%, in an electrician, janitor, FM's pocket, even if the client is not paying at a mall or at an airport or wherever they were not paying, we did that, right? So that's something we covered over the first 45 days. The next 45 days, we said we focused on the customer, right? How is the customer's demand going to change? What SOPs do we need to build? And we started focusing, doing a lot of research. We had a team of 3 or 4 people just doing research on technology that will be up post-COVID, right? We, from everyone, from cafeteria vendors to machine operators to everyone, that's what we did. And we urged all our employees, FMs, everyone to do the same. So that's kind of what's happened. And now, I think, come June, July, Hyderabad, Bangalore, the south has opened up a lot more, and we will now be in rebuilding mode. We've obviously been hit. I think anyone, and I've spoken to peers in the business, from IPCs to more of the service providers and people like us who provide the on-ground services. I've spoken to a lot of the owners or guys that are running the businesses, and in general, revenues are hit anywhere between 20 to 40%. I think gross profits are hit between 30 and 50%, right? I think that's kind of generally what I've noticed. So everyone has got to understand that, if you're not in this bracket and you're doing better than this, you've done well and your client book is good and diverse. So that's good. And if it's not, you probably want to think of diversifying your client book a lot more. So that's that. Coming to my next point on which is my last part, is how we see this going forward, or what we are going to track going forward, right? So, and I'll split this up into owners and employees, right? And people that are looking for jobs in this space. So just on the owner side, right, I think you got to keep in mind going forward, you got to track a few metrics. There are a few things you got to be very mindful of. First thing is you got to know your balance sheet, right? And when I talk, typically we come from investment banking and finance, so that's the first thing we look at, right? And this is very important in this stage. So there's a saying, or a phrase, that revenue is vanity, profit is sanity, and cash is reality, right? And that cannot be more. You cannot magnify this saying more than you have to right now in COVID, right? So cash is king. Cash was always king. Now cash is the king of all kings. You've got to make sure that you have cash in the bank, and that has to be the focus, right? So collections from clients, you've just got to make sure you tide through this time. Or if you know your collections are slow, you're going to have to figure out ways to capitalize debt, equity, however you do this. This is for owners. It's very important to stay afloat, right? So I think you got to really understand your balance sheet, understand how much exposure you can take. So before a client comes to you, and there are a lot of sites that now will start popping up, right? Because you have existing vendors that have either gone out of business or cannot afford to work at payment terms with the client. So you gotta everyone at their level, depending on how big or small the company is and what the strategy is in terms of exposure, has got to kind of understand their cash flows, right? And their cash conversion and how much exposure you can take. So I think that's the first and most important thing that anyone running a business or business division or a large P&L for an FM business needs to look at. The second piece, so which is balance sheet and cash related. The second piece that is very important, which everyone I would put number 2 on my list, is margins, right? You want to now start looking at clients. So go through your clients and go through and understand that every client, this is how much money we're making. This is how much operating cost it's going to take to service this client, And given this kind of margin I'm making on this client, is it worth me servicing the client given his cash flows, right? Understand the cost of capital is 1% a month, right? Some people may not have debt or working capital, but still I think you got to have the opportunity cost of capital baked in. The cost of equity capital is anywhere between 20 and 30% in India. Cost of, we all borrow overdrafts or revolvers or, OD, CC facilities at, anywhere between 9 and 12%. Some even 13. When we started SILA, frankly, we were borrowing at even 13%, I think, in 2010, 11. It's obviously count way lower now. But, and we don't have that much working capital, actually, we have almost none. But everyone needs to assess that, right? So you need to understand that if I have a client and I'm making only a management fee of 8% and he's not put leave and bonus and gratuity, which brings my management fee, my gross margin up to 12%, right, or 11%, and now that guy is saying work at 4%, so effectively my gross margin is 7%, and then he's paying me in 90 days. Is it worth doing business at 4%? Because 90 days will mean 3% of interest cost, right? So it's something that everyone has to understand. So my second point is understand your P&L very well. If you're not from finance, you need help, speak to your CAs, accountants, but you've got to be tracking this very, very carefully, right? So understand your gross profit and your P&L. Next piece will come to, again, related to this, EBITDA, which means what is our OPEX, right? So what is our operating cost of salaries of account staff, back office staff, operation staff, trainers, engineers, whoever you have on your back office, how much can you actually afford, right? Given that you've lost business and you see the business projected over the next 12 months, how much can you afford? And really start preparing for that, whether you want to downsize office space or do whatever. We've cut our OPEX by 30%, right? So obviously the senior most guys have taken most of the hit. People under the salary bracket of 35,000 a month have taken, almost no hit. But, and we have cut our costs on travel. We've gone into every little minute detail from a mobile phone expense to everything, right? So I think next thing you got to do is look at your costs and really trim costs wherever you can. So these are the things as a company you all need to do. Obviously, operationally, it's very important to make sure that you come out stronger than the rest. That when the opportunities rise, when offices start opening, there are a lot of customers that will probably be like, boss, I need people tomorrow, right? So you got to make sure your operational bandwidth is strong and your operations guys are still fully switched on to be able to staff sites or to provide services accordingly, right? So that's for the owners. I think that's kind of what I would say you need to be mindful of over the next 12 months. Overall, as a strategy, be nimble, be very flexible. You've got to be ready to do things that you were not doing and focus on compliance, right? A lot of small and mid-sized players in this market. There will be consolidation. People will start, running out of cash and might need a bigger company to come in and help and fund and look at deals, whether it's partnering, strategic, whatever it is, right? This will not be possible if you are not compliant, right? So you got to take a call on whether you want to run this business on your own for life as a lifestyle business. It might throw you some cash and run with that, or if you want to go down a route where you want to grow and fund growth, you've got to make sure you're fully compliant, right? So zero, what I would say, jugaad, very high levels of corporate governance, corporate governance. By that I mean with your employees, paying bills, and also with clients. And this is very rare, it doesn't happen that much, but we have come across cases on contracts where there's an expectation from the party giving you the work. All of that has to be absolutely zero and keep your corporate governance up. So that's kind of what my advice would be for owners, right, or people running businesses. On the job front, which is my last piece, I have touched on it earlier. 2 points: lower your expectations, and people might not like hearing it, but I'm giving you the truth. Lower your expectations in terms of perks, salaries, etc. Companies are going to try and be fair, and we understand that we are there because you are there and you're working, but please lower expectations. And the next thing is use this time to develop skills, right? Whether you're already employed, currently employed, or not, right, or looking for a job in the market. For example, communication is a very important piece in FM, right? You're going to have to learn how to communicate. So improve take a typing class, to take classes on improving vocabulary, improving the way you speak, your English, your communication. If you're an engineer, try and learn a little bit about soft services so you can double up there. It's not rocket science. It's harder for a soft services heavy person to learn how to be an engineer, but even there, understand the basics on how your DGs, HVACs, STPs, all the basic stuff works. You don't need to go into the complex stuff, but try and expand your skill set so that when the time comes up for a job, you can actually apply for more work that comes in, and there's a bigger market, right, or larger pool that you can apply to. So that's kind of my brief. I've gone over time, it's about 27 minutes, but I hope this was helpful. I've never done a Facebook live or just done a speech for 30 minutes like this off the bat, so I hope I've covered all the points. And I'll take any questions on the side. I see thumbs up, but I don't see any questions, so I'll just wait a minute. If anyone has questions, I'll take them. Otherwise, we're good. So I'll just wait 10 seconds. So I don't think I don't know if people actually watch this video later or now. So I'll sign off. Thanks to Nilesh and the whole team there, and good luck. Let's hope our industry turns around, and let's hope everything turns around pretty soon. Someone just said, any certification advice? Honestly, there are a few questions coming in. So on the certification advice, I assume you're asking for this from the FM side of it. Look, I'll give you our SILA's view, right? And I don't really believe, it would be great if you've taken courses on FM and learned on it. I think Amity University has a program. They've reached out to us. NICMAR, if you're from contracting, etc., it'd not be a bad school to go to if you want to look at project management or you're an engineer. And NMIMS has a program, Flame has a program. So look, specific certification in this space, I don't think there are mature or certifications that are yet that we have really, personally, we've not really looked at certifications when we're hiring, right? It would definitely help. So if you're doing nothing and you want to go out and get a certification, I'm all for education. I'm one of those guys that's gone and got an MBA as well. So get certified. However, is it a deal breaker for us as a company? Not at all. We would look at what you've done, how many jobs you've skipped in your life, what your expectations are, how smart you are, how keen you are, and how keen you are to work, right? So for us, it's more a culture fit than certification. So that I hope that answers. Someone else has a question on where do you see the FM industry in the next 2 years, right? 2-3 years. I said it before, right? I said paint for the next 18 months, guaranteed. There will be a shift in the way the industry operates. Paint for 12 to 18 months. Companies in our space will come back to, I think, our old levels we are hoping by April 21. So FY 2021 is a write-off for us. We're basically just going to be stagnant in our opinion, be where we were this March. And pain for the next 18 months, and then I think there will be an uptick, right? So I think long run there are tailwinds, but in the short run there are headwinds. Do you see a difference between post-COVID and pre-COVID era? I mean, how it affects non-compliance and compliance? IPC. So you know, in terms of compliance, right? So I don't know how this affects pre-COVID and post-COVID. I think you need to be compliant, period, right? So my advice to anyone running a business is be compliant or don't take business, unless you want to operate a very small or a smallish business where you know runs your house and you're content with it, and then I think you can. I mean, companies are a lot more flexible and you know cannot afford to or cannot win business at fully compliant rates, because I understand there are a lot of clients, smaller buildings, SMEs that cannot pay full compliance, right? So that's the reality uh, of how the world is right now, right? Or even was. So I urge everyone to get on the compliance front. It opens a lot more opportunities, but again, it really depends from business to business, ambition of the entrepreneur or the businessman. If it's a small MSME, whether you want to be non-compliant, make some money, you will stagnate at a certain space. If you really want to grow and keep moving, you have to be only fully compliant. So I hope that answers your question. Yeah, so I think there are 2, 3 questions that we've got, and there's none others that are coming up. So, Nilesh, I'll sign off, and you know, I think a lot of these questions are also answered in the first 10, 15 minutes of this little address that I've given. So, I hope this is helpful, and thanks for reaching out. Please reach out to us at SILA if you guys need jobs. We are still hiring in a few places, you know, so do reach out, go to our website, silagroup.co.in. We're a young company and, you know, looking to grow, and yeah, thanks a lot. Thanks a lot for giving us the opportunity. Take care. So I'll sign off. Thanks.